All right. So this is a very important subject for most people, especially for people who are middle class, who work a job and pay their bills. Um, Not talking about the businessman, business finance people already understand this kind of stuff, but most employees or middle class people who work 9 to 5 job, or um, two income family, to husband and wife working, they don't understand this stuff. It's like Just wanted to share this tidbit that I learned when I was in car sales. I sold cars for 5 years for Toyota, and I know um, how that business is, and I learned a lot of cool things about. Um, so, number one mistake people make is they treat buying a car as buying a house. Uh, Totally different things. Okay. Um, Cars are not appreciating assets, and by which I mean, unlike your house, when you buy it, it generally will go up in value long term. uh, that's the case. There's no denying that, because there's always going to be demand, and houses have land associated with it which doesn't depreciate at all. uh, in general, a house could be literally uh, rotten to the core, but it's still, because of the land, it will be still worth more than what you paid for it if you bought it 10, 15 years old ago. But most generally, houses are maintained because you're living in it, so it's not going to rot. It'll need some fixing up and all that stuff, but in general, even with those costs added, like maintenance costs had added, the house will be worth a lot more. So my personal house, that I bought in 2001, uh, is worth about 3 times what I paid for it. I mean, I haven't completely paid it off, but what I initially paid, or signed a mortgage for, is worth about 3 times more that money. Not to mention that if I rented, I would have wasted that money by giving it to a landlord who would be paying his mortgage to build his equity, uh, which is the same thing that what I'm doing. I'm being my own landlord. Uh, so all the money I put in for rent goes towards building my equity in the house. So now I have uh, a lot of money. It's almost like saving money, but in a lot better sense, because not only you're earning money, you're saving yourself from rent, and not everybody understand that part. But buying a car is totally different. Um, Cars are depreciating asset, opposite of appreciating asset. That means when you buy a car, it doesn't go up in value. We're not talking about classic cars. Nobody's driving old classic car with no safety feature. Everybody's buying brand new cars, or majority of people are buying newer cars because that's more appealing than an old clunker. Um, and you get more technology and all the stuff. So the cars depreciate as soon as you drive off the lot. That is something I didn't know about, uh, or I didn't understand very well. Might have uh, uh, a little bit information, uh, but the point is, as soon as you drive the car off the lot, it's worth a few $1,000s less, because now it's a used car. They can't sell it as a new car, so there has to be a price difference between new and used car, so you lose money right there. Not to mention, unlike house, cars generally don't go 2-3 times the value. Even the best cars, uh, like if they even retain their value, that's considered really good. Like some of the, like Toyota Tacoma, for example, they have one of the best resale value of any car or truck, and they don't go really like higher than what they, sometimes you see a little bit higher than that, but they don't do double or triple time what the value is. Like if you bought a car and you bought a house at the same time, paid cash for it, they're not going to go up in value. Like the house would probably be worth 3 times more but the car would be worth, best case scenario, same what you paid. uh, unless it's a classic. Again, classic cars are not something people drive, and they generally are rare cars that you can't use it as a commuter. So because you are gonna depreciate the value of that too if you wear it out. Like, parts are harder to get. So the point is, classic cars are not commuters. Like, you're not using it as for transportation. So ignore that part. But generally, when you buy a car, let's say you go to Toyota, you buy a uh, uh, brand new Tacoma, and which is the best case scenario, and then you drive it. uh, you're going to be maintaining it, which is like any car. You have to spend money on maintenance. Now if you are not maintaining it, none of the warranties on the car, manufacturer warranties, are valid. Just keep that in mind. So don't ignore the maintenance part on the car. So you got to maintain your cars. uh, that means oil changes, whatever it needs, because uh, this is what happens. Now if you didn't do oil changes regularly and the engine seized, uh, when you take it back to manufacturer, they're going to find out that it seized because there was no oil, or the oil was too old. Then they will say, you didn't maintain it, sorry, we're not going to fix your car. Now you can fix it by yourself by buying a new engine yourself, but manufacturer is off the hook. They're not going to pay for it because it's not their fault. It's your fault because you didn't maintain it. Just like in the house, you have to maintain it. Like if your siding is going out or roof is going out, you have to replace it. If you don't replace it, your house is going to fall apart. uh, but even then, you are you are in totally different type of expense right there. So point is, cars are depreciating asset. They're going to lose value. Some of the cars are really bad, like for example Nissan Leaf. When I leased it, I had no idea about leasing it. The car was originally $30 to $40,000 for Nissan Leaf new. With the incentive, it was like $23,000. So when I leased it, they gave me like government incentives and all the stuff. So I leased it, and within 3 years, that car was worth what was it worth? $10,000? Yeah, less than that. That was a retail, like if a dealer sells it. If you would do trade in, it was worth like $5,000. And the point is, it was terrible resale value. So $23,000 in 3 years turned into $5,000. That is not most people understand, and that's true with most cars. They will depreciate. To what extent, it depends on the car. So if you buy a car like a Chevy, Ford, or anything like that, they have terrible resale value. They are going to depreciate. So the worst thing you can do on a car is pay cash. Okay. First of all, you should understand that if you're buying a more expensive car or a higher depreciating car, just because it looks cool, you're going to lose more money on it. So you want to buy a car that's has least depreciation. Okay. Like reliable cars like Toyotas, Lexus, Hondas. These cars are considered reliable, and they hold their value better than Chevy, Ford, Nissan. So that is very important when you're getting the car. Now, why you should never pay cash for a car? Uh, the reason is that they're incentivize the interest rates. So if you have cash, you should invest it or keep it in something like even in some checking, like accounts pay you 5%, like a fixed deposit accounts. And also, if you don't know how to invest in your money, there are secured way of making guaranteed 4 or 5%. You should find out if you don't know that. But if you pay for a car, which you can finance for 2%, 3%, because manufacturers wants to sell their car, they incentivize them because they know not everybody has cash, so they want to make it easier for somebody to buy it, so they give you better rates. And 2-3% interest rate is a lot less than what you will get uh, uh, if you basically pay cash. You are giving out on that low interest rate loan, and that is costing you more. So if you had the money, you invest it, you make 5%. So 5% minus 2-3% is about 2%. So you're earning 2% on your money. So that is better way to do it. So you don't want to do that. Plus the fact that uh, when you are uh, when you're financing a car, uh, I mean, you are you're not you're not on what you call, you don't have all the liabilities. But generally, financing is still better because uh, with financing you have to have full coverage insurance, which you should never buy a new car without full coverage insurance, because the fact that um, there are a lot of times when you either have an accident, uh, if it's your fault, then the insurance company is not going to pay for your damages to your car, and then you'll be paying out of pocket cash. So if somebody buys a car and they don't have money for paying the insurance, they should not buy that car. Simple as that. Because you have to take into account the cost of maintenance, uh, cost of keeping a car, which means you should be able to pay for insurance, gas, parking, repairs, all those things when you own a car. It's not just like what you paid in the beginning for the car. You have to maintain it. So yeah, so those are the things that you should understand about the car. And then, like, say example, I can tell you about terrible depreciation. Like I bought a V12 S600 2003 Mercedes-Benz. That's a 12-cylinder engine. That's a huge engine with 2 turbos on it, and it was hand-built engine in 2003. So the car has luxuries, features that other cars didn't even have in that time, but was like a business class executive car. So it was designed for somebody who's very financially sound and needs something comfortable, and doesn't care about the money. They just want to buy a car that's very comfortable, and they write it off with their as an expense with the business, so they don't have to pay like a regular employee, because it's a business expense. It's not like their personal expense, so they get the maximum tax deduction out of it. So the point is, $130,000 car in 2003, I paid $5,000 for it. Yeah, that I bought it like few years back. So it wasn't even 20 years, 15 years. In 15 years, the car depreciated from $130,000 to $5,000. Part of the reason why the car would depreciate so much, and why general cars depreciate so much, is because cost of ownership goes up. That car has expensive things in it that break down, and when they break down, they cost a lot of money. So when you look at the Kelly Blue Book and all those things, they take into account those expensive repairs. So if the engine breaks down, that's 30,000-40,000, whatever that would be, because hand-built engine, so you're not going to get it cheaper. And then you have suspension that costs $20,000, brakes that cost so much money, turbos. I mean, like electronics inside it, because it's a luxury car. Everything is expensive in it. Now, people generally buy them like they're mechanics. They know how to fix those things, so they are not going to pay the repairs labor like a normal person will. And that's one of the reasons why I picked it up. I mean, I just wanted a V12, and this was the cheapest V12 I could acquire. But my point is, if you wanted a daily commuter and you buy that car thinking that, wow, $5,000, and you didn't pay attention to cost of ownership, you would be crying later on. Because one trip to Mercedes dealership, they will give you a $20,000 bill, and then you will be like, whoa, what is this? And I paid this 4 times what I paid for a car. Yes, it is, but it's expensive car. It was built, and that was the reason why you got it so cheap. So I hope you understand the depreciation and the cost of ownership. These are the things that took me a little while to understand. uh, but because part of the reason was I was working on myself on my car, so I didn't pay those expensive thousands of dollars of bills uh, to dealership. I paid $3,000 to dealership on my Mercedes, the first Mercedes I bought, and it wasn't even anything major, like no engine work, nothing. It was just like little stuff like radiator, fan, ignition, key lock, things like those simple things. But I thought it would be just easy to just let them deal with it, because uh, I couldn't figure out how to get that. I never did that part, like the ignition key lock, and the key was broken into it. So I paid them, and they dremeled it out. It was pretty hard. So they did spend a lot of labor on it, but they did fix it. The point is, uh, yes, cars are uh, going to lose their value. The more work they need, the less they're going to be worth. And certain cars, uh, like when they reach certain age, dealers don't want to sell. I mean, can you imagine that a dealership would not sell those cars? They will auction them. You know why? Because it's too much of a liability. So if you sell that $5,000 Mercedes at a dealership, and it's something expensive breaks, let's say within a week, or yeah, there's a lemon law. Now they're on the hook for that repair, and their reputation is online, so they're not going to pay. I mean, they sold your car for $5,000. They're not going to spend $20,000 fixing that car, because a Toyota dealership, for example, if they're selling a used Mercedes, uh, they're not worse to. They're not trained to work on the Mercedes, so they're going to send it to a Mercedes dealership, which is going to cost them. So the point is, too much liability. They don't do business like that. They're not going to lose money on a car that they probably got for trade. That guy bought a Toyota because he was tired of paying expensive repair bills, and now he has a more reliable car, and that is not going to have those expensive parts that break down. And he traded it in. So guess what happens? They just take it to auction, then auction it off, and let some guy who knows how to work on them, or some other dealership that can't get or don't care about reputation, buy like a smaller dealership, and then you find those cars in dealership like that. Um, Another way to look at it is, like, if a bank is not willing to finance a car, that means they don't think they can get their money out. So generally on the older cars, you'll find out bank won't finance it, and especially cars like these, they won't finance them. And that's because they know that if they finance it, the first time the car breaks down, the owner is going to stop making payments, and then they can repossess the car, but they will not get their money out, whatever they paid, especially if you buy from a dealership. So the same car, I paid $5,000 for it. If a dealer sells it, it will be $10,000 to $15,000 or more. And then if you pay that much, and you have now expensive repair, like a transmission goes out, engine problems, you have a $5,000, $10,000 bill. They paid already $15,000. They don't have the money to fix the car because they financed it. The bank is now stuck with the car because it doesn't run. And generally, majority of the people, when they're are paycheck to paycheck, they're buying a car above their mean, and they buy a Mercedes, they really give up on those cars, and that is bad for the uh, finance institution that lended you money. So they won't finance those cars either. So or if they finance it, it will be they know worst case scenario, we will be able to get, it will be a small amount, it won't be a big amount. So if they know they can get $5,000 at auction, they will finance it. But they won't finance $15,000. They would want you to put more down payment and stuff like that. So generally speaking, buying a car, financing is a better idea. Okay, because now you got the bank involved. So if somebody, like say for example, you bought it from a dealership, and they sell you a lemon, so there's some repercussion too, because you can go to your bank and say this is what happened, and they might put some pressure on. They might cancel the loan or something like that, and the dealership would be stuck with the bill. Uh, uh, but you have somebody behind you. You know, you're not just you didn't go when you pay cash. What are you gonna do if the car breaks down after a few months? You really at the mercy of dealership, and most dealerships are not going to spend any more money on them. They sold it to you as is, which is what most used cars are sold as, and now you are stuck with the bill. Either you're going to sell it for really cheap, lose a lot of money on it to some mechanic, or you're going to be basically paying out of pocket. Now the car became very expensive very quickly. So buying a car, buy a car that has good resale value with low depreciation cost, uh, and never drive a car with liability only insurance. Those are the two things that I would recommend. That would be and try not to buy the most expensive cars, like brand new cars that are like Mercedes. Luxury cars are generally very high on depreciation, so you do not want to do that unless you're a business and you can write it off. It's not a good idea. But most people who have making a lot of money, then that's not a problem. You know, you can write it off as a business expense because it's prestige. Looks, you're driving, oh wow, nice expensive car that they know that it's costing you a lot of money, but it's your business, so it's part of your write-off, so it doesn't matter. So yeah, so those are some special cases for owning those cars, but generally speaking, or you're a mechanic and you know how to fix it. But then again, it gets a lot of, like, I don't know about you, but it's generally a lot of people, even mechanics, like to work on other people's car because they get paid for it. But when they're working on their own cars, they're not getting paid, so there's less motivation for them to work on their own cars. So most of the projects, which is what that car would be sitting around until they get the energy and then they fix it. Like, I have a lot of projects, and I have very little motivation to fix my V12 right now, which has no major problem. It's just it had a check engine light on, ran good, and then it was air circulation for emission control that had a vacuum leak and it wasn't working properly, and I tried to fix it and I broke it, the what you call it, the connector on the vacuum tank. So, and it's underneath the intake, so I have to take it out. But I've done a lot of work on that car, but I just, this point, I just kind of threw the rug on it. I just, like, I don't want to spend my time and all this stuff on it, but I'm going to do it. But lack of motivation. So I hope you get that point. It's not it's a lot of money. So when you're buying a used car, if somebody's selling it for really cheap, that means it has problems. They're not just giving you that car for cheap for no reason. So just keep that in mind. Even a dealer, when they have a big mark down on price on a used car, they generally had some issues, or they know it's hard to sell that car. So a dealer will not keep a car for a very long time on their lot. So if the car is not selling because there's very little demand for it, because people know it's a highly depreciated car, they will either auction it or they'll mark it down. They have the minimum price that they will sell it at a lot, which is above what they think they will get at auction. But yeah, even Toyota dealership, when we had a Mercedes, sat around on the lot long time, and the reason why is because cost of ownership is high, so it's a very highly depreciating car. I mean, dealer can sell for a lot more than a private party can, but the liability part, so they don't want to sell that car, but unless, you know, it's mechanically sound and they don't think there will be an issue. But generally speaking, they would much rather auction it and let somebody else will deal with the problem. So yeah, be careful when you're buying a new car, and keep those things in mind. Average person doesn't buy cars as often as people who sell cars. So generally you don't understand these things, and is lucky for you, there's YouTube, so you can watch guys like me talking and trying to explain to you what the difference is, and hopefully that saves you some money. And yeah, another thing I would be discussing, and I have a lot of knowledge, so if you like this kind of information, I will be sharing it. But you have to subscribe to my channel, and you have to share or subscribe, like all those things that YouTubers want you to do, so that motivates them, because I don't get paid to make these videos until you subscribe and you watch my videos. And right now I'm just trying to create a content, so I'm making good contents that will save you money, and I appreciate it if you can subscribe, share, and like my videos, and that will be I'll be making more videos like this. Other subject matter that I will be talking about is vehicle service agreements. They call it VSA, VSC, like vehicle service contract, or VSA would be vehicle service agreement. Those are repair contracts. Some people call them insurance on the car for repair. Like general car insurance will not cover if your engine goes out. That is not part of the coverage. Your regular insurance will cover damage like accident, so it will not cover if the car engine goes out or transmission goes out or there's a problem with your lights are not working, things like that. Those things are totally not part of the regular insurance, so you have to have separate protection unless you self-insure yourself, which is, again, not everybody can do it. If you are making a payment on a car, chances are you don't have enough money to pay for the repairs, so you're going to put it on expensive credit cards, which will cost you more money. So if you, instead of you got a 5% loan on a car, now you're paying 15% on the repair. So if you have a $3,000, $5,000 repair, that's costing you a lot more money. But if you had a VSA, so you pay upfront a little bit of money, and you are able to not worry about those things. And it's a good thing, because they don't do VSAs on all the cars. And yeah, things like that I'm going to talk about in the next video. I think I've already said too much for the next future topic, but this is what I wanted to make. So please pay attention when you're buying a new car. It's your money. How you spend it is up to you. You can't blame the salesman for your decision to buy that car. If you purchase a car and now it's worth half the money, it's not salesman's fault. His job is not to do what I'm doing, trying to educate you on your finance decision, or your strategies, your savings. I mean, his job is to sell you the car that you want to buy. So he's not responsible for you buying a highly depreciating car, or a car which has high cost of ownership. And his job is not even to tell you how you should pay for a car. If you are willing to pay cash, which a lot of people nowadays are doing, it's your choice. He'll sell you a car because he gets paid to sell you a car, and he doesn't get paid if you if he if you don't buy a car. Generally speaking, if I am telling you as a salesman all these things, that's generally going to think that I'm just trying to preach you, and I could lose a sale. And that's not what a salesman wants to do. They want to sell you a car. However you want to pay for it is up to you. If you think paying cash is smart, which is not smart, the salesman is not going to tell you that, because he doesn't care. That's not how he makes money. You have to understand how he makes money. He makes money if he sells you a car. However you want to do it makes it easier for him to just agree with you and then sell you a car, instead of trying to educate you on what is good for you. And that was part of my problem when I was selling cars, is I was trying to do that, and like, they didn't understand that part. Like, when somebody's trying to help you, like, Why would you? And I was able to make sense to certain people, but majority of the people just walked away from me and bought it from a guy who didn't, in their opinion, push them to finance a car. They just like paid cash, and that was like, I didn't understand that concept. Like, I mean, I was like, here I am trying to help these people not make a bad decision by paying cash for a car, and they literally dumped me as a salesman and bought it from some other salesperson because he didn't tell them that. He just sold them a car. He he, he was a better salesman than I was, because that's not part of salesman's job to do. So don't expect your salesman, no matter how nice they are, to trying to talk you out of paying cash. Do your own research. But the points I gave you, there might be more points, but this is what I understand. And yeah, I mean, don't buy. I mean, if you, another thing is that when you are generally trying to pay cash, most people don't have cash in the bank account. They are getting a line, home equity, so you're borrowing against your house, or you got some settlement, uh, uh, things like that. uh, Not a good. So you're taking money out of your house, which is appreciating asset, and putting it into depreciating asset. No, don't do that. So yeah, uh, I hope you like my 2 cents, and I can say these things right now because, I mean, what are you gonna do? Stop watching my video because I gave you good advice? You can do that. Um, but if you understand it, then you're gonna hit that like button and subscribe to my channel so I can make more videos for you. Okay, thank you, and stay safe and be smart. Bye.